I finally passed my 100k FTMO challenge phase 1, but less than 72 hours into phase 2, a single 4.7k loss wiped out my profits and put me into a minus 3.3% drawdown. Today I'll show you exactly what went wrong and my plan to trade back to break even. So, welcome to the Displacement Diary, documenting my trading journey, one trade at a time. First, the milestone. So this is the official FTMO certificate showing that I met the 110k target with a 60% win rate. So this is a result of 7 years of studying markets, 3 years of studying ICT methodology, journaling trades, doing a top-down analysis of the market every day before trading. So looking at the journey so far, transitioning from phase 1 to phase 2 of the challenge. So I met the 110k target with a 60% win rate and a profit factor of 1.94. Then moving on to phase 2. At the moment, my balance is 96.6k, so I'm minus 3.3k in drawdown, and my maximum breach limit is 90k. So I've got a buffer of 6.6k, and the profit target is 5%, which is 105k. So I need to make 8.3k in terms of the recovery. To me, this is not a crisis. The same discipline that won me phase 1 is what will win me phase 2. I just need to be consistent. Now, here's the week laid out. So on Monday, 1.2k profit, one shot, one kill. This was a clean trade. I'll spotlight that trade for you in the next slides. Tuesday, 1.1k profit, and this is the day that I won. I passed the phase 1 challenge. Wednesday started phase 2, $732 profit. The structural setup there was a bullish continuation using a bullish order block. Thursday, again, a clean trade, $672 using the market maker sell model. And I'll spotlight this trade for you as well because there's some insights that you'll get out of that. And Friday, 4.7k loss. 24 trades, which indicate over trading and revenge trading there. And I'll spotlight this as well because there are some lessons learned that I need to pick up as I recover from drawdown. So let's get into it. These trades are worth your time, starting with the Monday one shot, one kill trade. So the market opened lower. This is the new week opening gap, Asia session there, and the market respected the volume imbalance monthly that I outlined in one of my videos. You can go and watch that video in full for what I outlined. But the market respected the volume imbalance, London session. The market paged the London session low and respected the volume imbalance high and rallied up, created this bullish order block, which is that one on the 15-minute chart. This is the 5-minute chart, and then also reclaimed this BC. So when New York market opened there on that bar, traded down, respected that bullish order block, and I knew that I had to get in. So I put some entries and pyramid the entries, targeting the Friday regular trading hours close, which is this aqua line there. That was my target. Clean trade, and it went to the target. That is what we call disciplined trading, and which shows that if you are patient and you wait for the signals, the market will give you the profits. Let's move on to Thursday trade. With this trade, again, it shows discipline and not revenge trading. The first trade that I attempted failed, and then the second one went through. On this day, the market opened. This is the new day opening gap, traded above the monthly relative equal highs, and then came back down, created market structure shift and an imbalance there. Sharply traded down, that's the displacement during the New York Hill zone. So when price closed below this CB, I then entered the market targeting that area. However, the market took me out, and this was a structural placed stop loss, which is fine. And then I waited for the New York Open, which is there, the New York Open. The market traded below and closed below this CB again, and that was the clue for me that the market is now moving, and I entered a short targeting the first trade. I pyramid this trade. The first trade target was the regular trading hours close from the previous day, and took the profit, take profit one there, and then I let the second trade run all the way to the 50% of the swing low on the hourly chart, swing low from that side, from the low to the high, the 50% area. That's what I was targeting because the market was bullish. I didn't want to stretch the take profit further than that. So you will notice that there was no revenge trading. Revenge trading is when you feel that you lost money and you are angry and you want to get back that money. Here I re-entered the market using the structure, and everything played out well, and you can see the profit there. So the idea is to follow the process and not worry about the amounts, and the profits will then come to you. Now, this is Friday, and I'm going to be completely honest with you, unfiltered. If you look at this chart, it tells you the story of what happened on Friday. So the context here on Friday is that we are trading Nasdaq on the all-time highs, which means that there's nothing to the left of the chart to anchor for take profits. So you've got to use other methods. So what I saw was I was anticipating the weekly reversal, which is the Judah swing. And when I saw these, the sell side liquidity areas there that could be targeted for, raids, including this bullish order block, that's what I was looking at when price was around there to short the market to this area. So when I saw this inversion BC during the New York session, I then took a short trying to go to the regular trading hours 50% area there, which was in confluence with the sell side liquidity and the high of the 1 hour bullish order block. That failed. My stop loss was taken out. Price went above the inversion BC, and when it came back down, I thought the manipulation had finished, and I took another shot targeting this sell side liquidity, but that failed. Then price came back again into the inversion BC, and again I attempted another short, and immediately the price reversed against me. At that point in time, I then noticed that this inversion BC had been reclaimed, and then this is the first presented fair value gap, and the market, you can see there, respected the price when it came down to retest it, and then it started going up. So when this BC was formed, I realized that I needed to take some longs, and I was right, and I started taking pyramid longs there. However, at that point in time, I'd wasted a lot of bullets here, and I was left with fewer bullets. And when the market was traded against me there, I had a margin call, which is what I've highlighted here. A margin call means that I was over leveraged, on that trade. And then as a safety precaution, the trades were closed on my behalf. So the lessons or reminders for me, there are three there. Not to pick tops when trading all-time highs. And second, two failed attempts is equal to stop. These were far too many attempts, and I was left with no bullets at all. You need to stop and reassess the market. Then the final one is if I looked at the 4-hour chart price action, it was clearly showing that the New York Open was forming the discount Judah swing before that manipulation that happens before going up. So this is the manipulation that happened before price went up. So what this leads to is, for me on Monday, is to now go into my drawdown recovery protocol, where I have to reduce my risk to 0.25%, and then 2 strikes, then I stop and assess the lay of the land again. And I have to wait for A+ setups only that are meeting a minimum risk to reward ratio of 1:2. If it's not that, if it's less than that, then I'm not touching that. And then again, I'm not going to be pyramiding until I have 2 successive days where I have green day, where I'm in profit. And then after that, I can then pyramid trades. So this is the takeaway from Friday. Let me show you how the account stands going into next week. So this is where I am. This is my current balance, and the breach level is 90K. So I've got a buffer of 6.68K going into next week with a target of 105K to pass phase 2. So what I showed you is how I traded on Monday and Thursday. That's exactly what I need to do. The protocol is very clear. I cannot afford another Friday, so I've got to follow that. Before I go, next week's analysis is going to cover something that Friday exposed in a big way, which is trading the all-time highs. This is when price has no historic reference above it. So how do you set targets? How does the Fibonacci projection framework look like at all-time highs? How do you identify whether a pullback is genuine or it's just like a TGIF trap? I'm going to break all of that down before the week begins. The video that goes live this weekend. Make sure you subscribe so that you don't miss that video. If you found this informative, hit the subscribe button. Share it with someone who trades or who wants to learn. and I'll see you in the next video. Process over outcome. See you in the next session.